Hey everyone, and welcome back to Everything Tesla Stock. Tesla has been in the news in recent months with several analysts and stock experts sharing their expectations of the stock performance. For a company that has outperformed several analysts' predictions, Tesla most definitely has a bright future. Considering the many actions by the EV company to boost its stock price, such as the just approved stock split, Tesla might even reach higher milestones than expected. Tesla stock investor Ron Barron has shared some reasons as to why he thinks that Tesla will be the big name to watch in the coming years, and how much he believes that Tesla investors will be able to make after the stock split. Keep watching to find out more. But before we get going, don't forget to hit the like button, subscribe, and turn on notifications to keep up to date on everything going on in the world of Tesla. American fund manager and Tesla investor Ron Barron has once again revealed some long-term predictions on Tesla. Barron is the CEO of Barron Capital Management, which is currently among the EV market's largest investors, with a 1% stake in the company. According to Barron, his company has made about 20 times returns on his $380 million investment in Tesla. The Tesla bull recently revealed in an interview where he revealed that Barron Capital Management has been a Tesla investor since 2014, a time when Tesla stock was going for $40 per share, and he made about $6 billion in profit since then. Barron stated that he's a big fan of Tesla, and this is rather obvious based on his many bullish predictions on his stock. Also, Tesla is among his company's top 10 holdings. Owing to Barron's positive expectations of Tesla, it's believed that the stock expert not only sees Tesla as a high-ranking EV company, but also as one with positive potential to dominate the EV industry and rake in high returns for its investors. To find out how much Ron Barron thinks Tesla stock's going to be worth in the next 10 years, keep watching until the end. While speaking in the interview, Barron stated that investors are likely to make 3 to 5 times their investment in Tesla 10 years from now. He also added that the automaker may well be the largest company at that time. Considering Barron's years of expertise and experience in investing, his predictions are to a large extent valid. Also, Tesla is already one of the most valuable companies in the world, and with more years of continuous growth, the EV maker may actually reach Barron's predicted milestone. Aside from Tesla's production and scale of electric vehicles, the company is also diversified into several other businesses like solar products, energy storage solutions, and batteries. The automaker has also started investing in artificial intelligence, and with so many projects in the works, while some others like the robotaxi and Tesla bots are sure to soon hit the market. Although like other EV companies, Tesla has had its challenges, especially for complex supply chain environment management, its stock valuation has continued to increase. Factors like inflation and production challenges are a huge major drawback to the company's finances, but that does not seem to be a big hindrance in the long term for an investor like Barron. According to the Tesla investor, he's less bothered about this news since his company has proprietary research done on companies that they want to invest in. He added that his company invests in a business, not its stocks, and so they look at a company's growth prospects rather than its stock value. Barron believes that it is safe to invest in companies that can grow much faster than the economy, and they are able to stand in times of strong market challenges. Judging by Tesla's market history, these are qualities that best describe the EV company, and little wonder why Barron Capital is so keen on its investment in Tesla. Although recently the company sold around $1 billion worth of Tesla shares, its portfolio still includes around 12.8% of total assets under management invested in Tesla. Though this may seem like the investment firm is less bullish on Tesla, that is not the only case here. Barron has also revealed that one reason why his company sells its stocks is if an investment becomes very successful and as a result represents too large a percentage of diversified portfolios. In such a situation, the company gradually reduces its holdings on the share. There are several reasons why companies continue to see Tesla as a profitable investment. Over the years, the EV maker has continuously ramped up its car production. To date, Tesla has produced more than 3 million electric vehicles, crossing a milestone that many of its competitors are nowhere close to. The CEO of Tesla, Elon Musk, recently revealed the automaker's plans to produce 20 million cars a year by 2030. Also, while addressing stockholders at the firm's recent annual meeting, The CEO said that Tesla is making moves to achieve a production rate of 2 million vehicles by the end of this year. Although Musk's 20 million cars by 2030 projection was met with skepticism by some analysts, it is still interesting that the company has such an ambitious plan. And considering that the company is now producing more than 3 million cars compared to its 3,000 car production value 10 years ago, this prediction could actually become a reality. This is something Barron might agree with, since he has stated that Tesla has got the potential to produce at least 10 million electric vehicles per year. In a bid to achieve this milestone, Musk hinted some of Tesla's plans to expand its network of gigafactories. Musk stated that Tesla may likely add at least 10 or 12 new gigafactories to its existing lineup. He also added that the aim for this is to increase output to about 2 million units per factory. Tesla's been making efforts to increase production in its existing gigafactories, and the result has been positive in some of these facilities. The automaker's Shanghai Gigafactory alone has produced more than 1 million cars as of August of this year. And according to UBS analyst Patrick Hummel, Tesla's Berlin Gigafactory may likely produce a gross profit margin of 30% this year. Tesla's also started deliveries of its Model Y in Australia and New Zealand. Luckily, Tesla is not the only business that is making waves. Musk's spacecraft manufacturer and launch provider, SpaceX, is also becoming an attractive option for investors. The sister company to Tesla is working towards developing Starship for its first attempt to reach orbit. According to Musk, a successful orbital flight is probable between 1 to 12 months from the beginning of the announcement. This could be the reason why investors like Ron Barron are starting to allow funds to go towards this investment. Barron recently revealed that SpaceX is one of the 2 largest investments he made in the past couple of months, stating in figures that he had added $100 million to his stake on SpaceX. That is a lot of funding for an investment. Barron believes that his investment in SpaceX will yield about 20 to 30 times his capital after 10 years. If things eventually turn out as Barron expects, SpaceX could be bigger than Tesla in the coming years. The private space company has raised about $2 billion in 2022. Although Barron does not expect that SpaceX is going to go public anytime soon, he does, however, expect that Elon Musk's internet satellite service, Starlink, is going to go public in the next 3 years. It's not surprising that Ron Barron is a big fan of Tesla, as the EV company is what the stock investors classify as a good investment. Barron's interest in Tesla seems to go beyond its current performance, rather than being something for the long term. According to Barron, competitive advantage is one of the important factors to look out for when choosing a company to invest in. How a company operates and what makes it difficult for others to compete is a vital indicator of its future potential. Barron added that although most people understand what a growth company is, only a few have a good grasp on the concept of a competitive advantage. The stock investor believes that Tesla's competitive advantage is in its culture of rapid innovation, and this is evident in Tesla's recent updates on its expected projects. Tesla's got the experience of making not just electric vehicles, but also batteries as well. This sets it at the forefront of achieving some incredible projects in the future, and eventually dominating the EV industry. In recent news, the Californian government has recently released a proposal to increase the sales of zero-emission cars to end dependence on conventional and gasoline-powered cars by 2035. This is done in a bid to tackle climate change and poor air quality. Likewise, Tesla's FSD feature can also further increase its consumer base and car sales in the future. With the global increase in technological advancement, individuals are likely to opt for options that make daily activities a lot easier. Tesla's full self-driving feature makes driving safer and less stressful. That's something EV owners are going to prioritize now and even in years to come. Factors like this are and will be major contributors to the sale of Tesla's electric vehicles in the coming years. And if all goes planned, Tesla can meet its financial goals and consequently increase its stock valuation. What do you think the future is going to be like for Tesla? Can investors really make 10 times their investment in Tesla just as Barron has stated? Let us know down below. While you're still here, go ahead and click on one of these 2 videos on your screen. See you there.